Hey, what's going on, everybody? Welcome back to Bonafide Investing, where we talk all things high yield investing, as well as options, futures, and really just investment goals in general. If you're new to the channel, welcome. To give you a little bit of background about what we're doing here, this cash flow life portfolio is something that I've been experimenting with for the past roughly year and a half. I took a good chunk of my net worth, about a quarter of it, and I put it into this currently roughly $500,000 experiment with the goal that it pays my bills as well as maintains and pays down my margin over time. So being mindful of inflation and risk is key to this strategy. But if you like what we're doing here, please click like and subscribe. Help support the channel. Nothing here is investment advice, not now, not ever. So please do your own due diligence when making your own investment decisions. Not a lot of changes today. Market's pretty flat to slightly down last I looked. So no big updates with the portfolio. What I want to talk about today, what I want to focus on is gold. And I think what the message gold is trying to send to these markets, this economy. And again, I think gold should be a pillar, a foundation of anybody's diversified portfolio. For cash flow life, the way I have to get gold exposure, I do it through these four holdings here. I should say GLDY, IAUI, and IGLD track gold directly. They're covered calls, sometimes a little bit more extreme option overlays for these holdings. GDXY tracks the miners, the gold miners. So I have four holdings in here, and this is how I gain exposure for this cash flow life strategy through gold, since the goal here is to capture income over growth. So what I think gold's trying to tell us, gold had a monster 2024, even bigger 2025. I think when I started investing in gold over 20 years ago, it was still like $700-800 an ounce. But I like gold. I don't like it for the reasons that a lot of people might think. I actually like to see the gold price go down. Why? When gold goes down, it usually means that our lives are better, right? It usually means there's a little bit more certainty out there. Prices are usually lower and stable. But what gold, I think, has been telling us since coming out of the whole COVID debacle, or whatever that you want to call that, it's been on absolute tear, right? I think it's telling us a few things here. I think inflation will pick up in 2026 onwards. I think that the whole cycle, the whole monetary cycle is shifting. I think we're in for higher rates, higher inflation, because that's the way the government is going to deleverage its debts, right? Very similar to the 1940s to 1970s. We saw rates rise, we saw inflation rise. I think the whole 60-40 portfolio, 60% equity, 40% bond portfolio, I think that was great the last 30, 40 years. I don't think it's going to be great moving forward, right? So I think gold is telling us there's going to be a shift. There's a new cycle on the horizon, right? I think that's part of the issue. So are you ready for higher inflation potentially, right? Are you ready for higher interest rates potentially? I was talking to a friend who the other day I had coffee. We're talking about, when rates fall, when the Fed's going to keep lowering rates, right? I'm going to refinance. Well, again, the Federal Reserve, and we had a good conversation about this. The Federal Reserve only lowers the overnight rate, what banks lend to each other. That's really they can only control really the T-bill rate. And I would even say the 1 month T-bill rate, right? They have no control over the long-term rates. That's what mortgages track, the long-term rates, right? The 10-year treasury bond is what the mortgage industry tracks when it comes to mortgage rates. So the Fed's been cutting as of late, and long rates have been rising, right? So we're getting this re-steepening now after the longest and deepest yield inversion on record. Now we're getting the re-steepening. Bad things usually follow re-steepenings. I'm in the camp that bad things are coming. I'm not an alarmist. I'm not a fearmonger. I just study history, data, right? I like math. I always say put your faith in God, put in math, not in politicians and bankers, right? Two very different ways, I think, to assess things. So I think what the data is telling us is to be extremely cautious, to be, I think, just prudent around our investment decisions, right? I said in a past video, if you haven't made money the past few years, I'd be concerned, right, for what you're doing. I think everybody's made money. That goes without saying. Um, but now I think it's protecting, what we've made. I think it's risk first, return second. And that's my goal, not only with Cash Flow Life here, but I think with all my investment strategies that I have across multiple accounts, right? I have a family, I've got kids. I can't really afford to have too much downside, right? So again, being mindful of that, I think gold is flashing a warning sign to all of us to pay attention, right? I think what's coming will be nasty. I do. But I think there's a lot of opportunity in that nastiness. And I think if you're prepared and you're taking the right steps, you can protect yourself, your portfolio from the potential carnage. So the other thing I think gold's trying to tell is I think lower growth, right? And I think there's just going to be more Fed printing. I think the Fed now has kind of put itself in a position where they can't stop printing. 2020 was an interesting year. We had that 30% sell-off. I think it was the fastest, if not second fastest, 30% sell-off in the history of US markets. And what's interesting about that is we had a V-shaped recovery, right? It crashed hard, came back. If you remember April this year, around the tariff deliberation stuff, Deliberation Day, whatever they're calling it, the tariffs, it was interesting that we also had about 22% sell-off, and it was V-shaped. It's because the Fed just floods the system with liquidity, stopping the business cycle, right? Not allowing the business cycle to run its course. So the government, in essence, is altering the business cycle. Now, they can't really alter the market monetary cycle too much. I think market forces drive that more so. I think the Fed and the government, yeah, sure, they play a role in that. But I think at the end of the day, markets really dictate, right? And that's the healthy way of doing things, letting markets run their course the way they're supposed to. Crashes are bad. Corrections aren't fun, but they're necessary. They're part of the cycle. So when you stop the cycle, you're just in essence kicking the can down the road, right? You're just postponing the inevitable down the line, which will most likely make it that much worse, right? So I think in 2020, we were actually due for a significant market crash. I really do. Coming out of the 08, 09, historically, we've had market crashes and recessions about every 10 years, historically. We're now going on about 15 years, right, without a crash. So we're long overdue, right? And I think what was supposed to take place back in 2020 never fully materialized. Now, again, these are my opinions only, okay? But if you look back at all of it, it's interesting that, the Fed just flooded the system with liquidity. And what have we had since 2020? We've had just huge inflation, right? Inflation that we haven't seen since the 70s. So, and again, if you believe the CPI number, good for you. I personally don't. I think it's not even accurate. If you measured CPI the same way even 10, 20 years ago, we'd probably be at about double of what we are now, right? So it is what it is. That's what we have to work with. So can't complain. We just have to kind of invest and do our best to work around that. But so I think the yield curve is also telling us inflation is coming back. I'm a firm believer in that. Now, that doesn't necessarily mean all of our assets will inflate. We've had 3 years of bull market, driven by this AI rally. Now, are we in a bubble? Yes. I'll just answer that clearly. Are we in an AI bubble? Definitely. Are we in an everything bubble? Not sure, right? I don't think we're necessarily in an everything bubble, but I think we could be. So I don't think this bubble is going to pop tomorrow. Now, I'm hedged, right? I'm actually going to buy more leaps puts on these markets, on the Qs and the SPY, the higher this thing goes. Just in case it does pop tomorrow, right? In case it crashes tomorrow, I want to be ready. I don't try to time markets. I'm terrible at it. I've said in past videos, I'm not a good market timer. So that's why I like to use data and charts and history to help drive my investment decisions, not my emotions or what I think might happen or not happen. So I'm hedged, right? I think these markets will crash. I think they'll crash epically. So I want to be prepared, right? Whether that comes in a week, in 2 years, whenever, I want to be ready. So I think gold is really sending us this huge warning. And if you've watched silver and even platinum and palladium lately, these other precious metals, silver is very industrial. Silver is also a monetary metal. So it kind of plays a dual role where gold is strictly money. It's God's money, right? It has 5,000 year history. It's mentioned in the Bible many times, multiple times, dozens of times. So pay attention. I think gold knows what's going to happen. I think it's sniffing something out, pricing something in long before it happens, whether that's a collapse, more inflation, both, right? It's important to pay attention to it. Gold and then bonds, I think, are the two markets you want to watch for what's kind of happening and what might happen. I think a lot of people get caught up watching stock markets, stock indices. And usually if you're watching stock indices and they start crashing, you're too late, right? Markets will crash and they crash hard. Remember, when markets go down, they go down in a magnitude of 4-to-1 versus what they go up. So keep that in the back of your minds. When markets crash, they crash hard. And usually it's too late to get out. So again, I'm very, curious, interested to see what might come from all this. I think gold will still go up, right? I'm cheering for it to just cool off or even go down. It's one of those assets, like I said, it's probably the only asset I own that I don't really want to ever see go up in price. And I gave you the reasons for that earlier. So we'll see. These are some of my thoughts around what gold's telling us. Love to hear your comments, what you think. Go ahead and comment below. But again, please like and subscribe. Keep this channel going. Hope you got something from this video today. Have a great day.